And by now, most of us have already heard that the Congress provided a short-term patch for the Highway Trust Fund, which was about to run out of money. Now, Jeff, I'm curious, what does this have to do with the federal tax returns filed by estates?
Well, the Highway Trust Fund legislation had to raise money to pay for the work that was to be done. The basis consistency rules have been viewed as a revenue generator and a loophole closer going all the way back to the 2010 budget. And it makes a lot of sense. For example, what this legislation does is it ensures that all capital gains are properly collected without having a cost on the estate tax side.
In this context, what does it mean that the IRS complains that it's being whipsawed? Do estates and beneficiaries really have a vested interest in disagreeing over the value of a decedent's asset?
So there is a possibility of a whipsaw in this situation. For example, if the date of death value reported on the estate tax return is $100 for an asset, and 5 years later that asset gets sold, and the beneficiary reports the basis at $150, because that's what he thinks the fair market value was on the date of death, as opposed to what was reported on the estate tax return, the IRS would lose on the capital gains that it should collect if the basis were 100 rather than 150, but the statute of limitations has passed from the time that the estate tax return was filed, so the IRS can't go back and assess tax against the estate for a higher fair market value. So the IRS gets whipsawed in that situation. There are situations, and many situations in estates, where the estate is interested in lowering the estate tax and having a lower fair market value for the date of death, but the beneficiaries who are going to inherit those assets and sell them later on want a higher estate tax value because they'll have a lower capital gain. What's interesting in certain situations, if you have a marital deduction and everything's going outright to the surviving spouse, there's not necessarily any estate tax liability in that situation. But at the same time, the executor might be inclined to increase the value just so that the spouse who inherits can sell the property at a lower capital gain.